Hello, friends. Welcome to another episode of Market Structure Series, where we are discussing our trading 618 system, which can be employed on any time frame, any market conditions, and on any instrument. It does not matter if you are using that on cash market, on futures or options, or even on commodities. So let's recap what we have done till now in the previous two lessons. In the first lesson, we have discussed the concept of identifying swings, that how do we identify if the market is moving in an uptrend or the market is moving in a downtrend. For that we have employed concept of new structure high and higher higher low, lower high. For example, if you pick this chart, or it's not like that, I have identified this chart for some specific reason, we can identify any chart. These are the FNS stock which I usually use as a bucket of my stocks which is on watchlist for trading. So if you pick any of this stock, concept is same, it applies everywhere, right? So let's get ahead. Any random chart. So okay, this is LIC Housing Finance. So let's start from the highest point, which is this. From here, the market is, if we see what the market is doing, this was the highest high which was opened from this point. So this will be called as, let me print the text tool. This will be called as higher low. We are applying the same concepts which we have learned in the previous two chapters on chart. Okay. So here we can see it has made a higher high. Now, if you remember the concept in our second lesson, we should have some expectation from the market. If the market is moving in an uptrend, we have expectation that the market should be going down without breaking the previous higher low, and it should again make a new structure high from somewhere between this range, a range of higher low to higher high. But as we can see, our expectation has failed here. How has it failed? Because we were expecting a new high from somewhere between this area of higher low and higher high. But as you can see, the expectation has failed and it has made a new low, which will be called as new structural low. I have explained these concepts in my previous chapters. The links of those chapters will be placed in the description and top right corner of the screen. You can go ahead and watch. If you do not understand anything, please watch again and again. Try to grasp the concepts. It's very easy. Once your eyes are getting trained, it will be very easy. It will be like you don't need to identify any of these structures. You see a chart, you will quickly know that the stock or the instrument, is it in uptrend or is it in downtrend. All right, so let's get ahead. So far this has made a new structure low. After making a new structure low, we see or we anticipate that the market has moved in a fresh downtrend. The uptrend has stopped from there. Now we expect the market to pull back higher, which did. So our expectation has met. Now other expectation is that it should again make a new structure low. Sorry, not new structure low, it will be a lower low. From there, we still have an expectation that it should retrace upside. Now another expectation is it should move downside. Now again, this expectation over here gets failed because, let me point out. Now this is the, let me grab it. This is the lower low which price has made here. This is the lower low which the price has made here, right? And this is the lower high from where this new low was made. Now, what was our expectation? That price should not, let me zoom it out. that price should not breach this high, but it has moved over this, confirming that the trend has changed to the upside, right? So this expectation has got failed. This expectation has got failed here. Now, since we have made a new structure high here, let me write it for you. New structure high. Please do not skip the video, otherwise you won't be able to understand. Please watch the video without skipping so that you are able to get the most of it. Alright? Okay, so here new structure high has been made. From the previous lesson, if we try to recall, our expectation now is that price should not breach this lower low. Instead, it should reverse from somewhere here, which again price is not doing. What means that the expectation is again getting failed. New structure high, and we again get a new structure low here. So two expectations are getting failed continuously. No problem. There is no trading system in the world which will be not getting failures, which will not be giving losing trade. It certainly will. But point is, whenever you are losing, how small you are losing, and whenever you are hitting the ball out of the park, how big it is. That means the profits which you make, how big they are against the losing trades, and the losses should be very small. That's how the trading is done. This is how the game of trading is done profitably. Yeah, coming back to this concept, new structure low has been made here. Now we expect that the price should retrace upwards without breaking the previous high. So it does that. Our expectation is met, and after that, it's again making a new low, right? It has again made a lower low here. So our expectation is again met. Now coming to the current market swing, now we try to understand. It's a very important concept. Please try to understand without skipping the video. Watch the video entirely. So what's happening here? Now our workable swing is this. This is our swing, right? This is the highest point, and this is the lowest point. Now, if we see and try to calculate how much of the expectations are getting passed versus failed. So, if we start from this swing, this is our first expectation to the downside. Now, another one was pullback, it has passed. Now, another was to make a new low, it has already passed. Now, again, we had expectation that price should move up. We got that, it is passed. We expected for it to make a new low, it has made it. It is also passed. Now this one, it breached this previous high. So our sixth expectation from the market is failed. All right, no matter. We will always be getting failed expectations in the market. And seventh expectation also gets failed because we were not expecting for this to breach down, but it has. Now, since we made a new structure low, we were expecting a pullback upside without breaching the previous high. So it has also met. Now another was that it should make a new low. It has already made. If we see our present structure or present swing, it has also breached the previous swing high. You see, this lower high has been broken to the upside. So LIC housing has moved into uptrend. From our analysis, we can say that it is currently moved into uptrend. We will try to analyze this particular swing in a very detailed way, just in couple of minutes. All right. This is where trades are taken, or this is the latest swing where we'll be analyzing. We will try to, explore every concept of this trading system here. All right. So if we see, actually, this was a failed trade. Okay. So this was failed, right? This was pass, this was pass. Sixth one was failed. Seventh one was failed. And if we also include this one, this is also failed, right? This is also failed. So if we calculate how much of the, how many percent of expectations are getting passed and how many of them are getting failed, we can see out of 10, 4 have 1, 2, 3, 4, 4 have failed out of 10. That means your trading system is winning 60%. 60% of the expectations from this trading system are getting met. In fact, 60% is a very good percentage hitting ratio. The persons who are already involved in the game of trading, they would know that 60 or more than 60% or 70% is a trading system. I mean, many banks or many institutional level traders would be craving to get this system or get this kind of precise system, right? From maybe a month past or couple of months, I have been trading this system and it proved somewhere around less than 50%. The hit ratio was less than 50%. Even it is profitable. I have done trading with this system when the hit ratio was somewhere around 35%. Even I was able to make good money, good profits, because my stop loss is very small. And when I hit, profitable trades, it is just out of the park. Ball goes out of the park. All right. So as we can see how to mark these things on a chart and a candlestick chart. I prefer candlestick chart, and the charting platform which I'm using is tradingview.com. By the way, this is a premium account, but you do not need a premium account to accomplish any of these things. A free account on tradingview.com is more than enough for using its charting package. You can sign up on this one, use any of the instruments charts to gather this information. You have multiple options you can use. I mean, just the way of representation of this price action can be done in any way. Either it can be in a line form, columns, candles, multiple ways. Most widely used chart type is candlestick, which is this one. All right. So let's go ahead and try to figure out this particular swing. Mind it, this is a daily chart for like LIC Housing Finance, but you can use this concept on any time frame. Even I'll show you, in fact, I'll show you this concept on seconds chart. It is so beautiful that it is across all time frames, across everything. Even you can apply on options as well. I do not encourage using options trading when your capital requirement is, capital allocation is less. But if you are having solid risk management at place, trade management and risk management will be coming in the later chapters, which is very, very important before opening any trade. So stay tuned. I'll be covering all those topics. All right, let me remove all these drawings from here. Okay, and focus on this particular swing and try to drill down further concepts of strength and weakness. So far, this was our swing, and we were expecting that the price should get rotation, or it should reverse somewhere from here. Our original concept is to measure the retracement and analyze the price action somewhere around 61.8. So, guys, you might be wondering why the channel name is Trading 618, because 61.8 is called the golden ratio of retracement, and this is the thing around which this trading system has been made, designed. So, that's why the name is Trading 618. Whenever you find a swing that it has made a low or a high, you just plot a retracement tool and try to see what exactly is price doing. Is it slowing down? Is it slowing down around this area of 61.8 retracement? No. The price was having very good momentum. You see, the candles. Okay, let me remove this. Let me remove this. We, what is our expectation now? We were expecting that the buyers around this area, around 61.8 figure, should be getting slower and slower. But you see, buyers are very aggressive right from the starting. They pushed from here, one, two, three, four, five. Five candle is straight. I mean, 5 days is straight up way, right? In the same way, very small retracement, and again one, two, three, four, five. Again, entire week of uptrend, right? And when it is reaching this area of 61.8, the buyers are is still very intact. They are not losing the ground. So our expectation is getting reduced. You see, we should think that the price is not, slowing down here. We want that the sellers or the black candles should be very strong. But the black candles, our expectation, as you can see, was for shorting, for selling downside. Now, what do we want for shorting? We want to see that the sellers should be getting strong over here. The white candles or green candles, in any case, should be getting smaller and smaller, which is not happening. So we should be getting alarmed that our expectation is expected to fail. There's a possibility that the price will be not retracing from here and it will be breaching upside, and which it did, right. It has broken this particular high. Now, why this high is important? This was the high which led to this low. Since this has broken to the upside, now our you know downtrend is changed, and we are in an uptrend now. And it now it is an uptrend. Now, what do we expect now? Our expectation now is that price should give a retracement to the downside, right? If the swing has completed, we do not know if the swing has actually completed here, or buyers still have the strength to push the market even higher. There might be a possibility that the price continues up till now here or somewhere around this area. You see, if we see to the left, where are the sellers? Where has price started its downtrend? From here, from here. Now this is the area which was dominated by sellers. You see my point? So we expect that price should be getting a resistance, buyers should be getting stiff competition somewhere around this area, right? And from here, the price should retrace. Now, what will be our next expectation? Expectation will be pull out the retracement tool, measure the swing, and watch the price action when it comes somewhere around here. You see, when the price comes here, we need to figure out how the momentum is. Momentum means the speed. If the speed is slowing down like this, we will further drill down to maybe 1 hour chart or 15-minute chart, and we will see a small new structure high. Now our expectation will be a pullback, and from there we can open a position. The precise entry position. Precise entry position is a concept which I will be discussing in the next chapter. It's a very important concept, so I will be discussing in that one. All right. So, mind it, LIC housing is in uptrend. It's not a sorry. It's not a recommendation, but yeah, we can learn from this one. I will also be posting potential stocks for swing trading and potential trading, positional trading, which can be held onto your demat account for a couple of weeks or up till now, once your target has been met. I mean, short-term duration targets, short-term duration test trading. Instead of intraday, it will be something like couple of weeks, 1 week or 2-3 weeks. So this is the concept of swing analysis or momentum analysis inside a swing. We have identified that this swing has made a new high. We have identified where the sellers were in the past. So this is the area where sellers have the domination. So what do we expect? We still expect that this area of sellers should get hold, and somewhere around this area the buyers will be having a stiff competition and the price will do this. Once price comes here, we need to be vigilant. We can place a what actually I do, I will place a alert like this somewhere around 61.8, and when the price hits here, I will drill down further to smaller time frame and try to identify, apply the same concept which we have learned so far. Identify the swings. Whenever I now our expectation is to buy after this strong momentum. Our expectation is to buy. So I will be again looking for a new structure high in a shorter time frame. It will give me a very small stop loss with entire target of this swing. So if we find something like this, we will again pick our retracement tool, measure this swing, this smaller swing on a lower time frame, put our buy order somewhere around 61.8 here with a stop loss just below this swing, which is not yet on the chart, but we expect something like this. Now our target will be very long. I mean 1 to 1 expect of this swing. We always expect that a swing will be completing 1 to 1. You see, so if you hit or get your entry here, your stop loss will be very, very small and your target will be very, very big. You see, 16.5 risk reward. If you lose 1 point, you stand to gain more than 16.5 points. That's absolutely phenomenal. That's big. That's huge. Now forget about 1 to 1 risk reward, 1 to 2 risk reward, 1 to 5 risk reward. This is traditional. This is the cherry on the cake. This is how money is made. People keep on cramming the concepts which is leading to what 1 to 1 ratio. You lose one, you gain one. That's not going to build your capital. Anyway, this is the concept. You lose 1 rupee, you gain 16, more than 16 rupees. That's how market wealth is built. But yes, over time, not every trade will be profitable. No, you cannot expect that. Okay, I hope that these concepts are easy to understand. My request is do not skip the video. Please watch the full video. Watch again and again. Try to understand. Try to grasp the points. Please do let me in the comments if the concepts are not clear. I will certainly reply back whatever the query is, right? So this is it for this current video, guys. Please like, subscribe, and provide your feedback, valuable feedbacks in the comment section. I will try to reply back to every one of you. In the later chapters, I will be covering the precise position to entry, precise entry positions. That's a very important concept, and I will be covering that in the later chapters. Thank you and have a nice day and happy trading.